going on, DeRosa Insiders community? This is Matt Faircloth, and welcome to DeRosa Insiders Live. Current event. Here's something going on in the world, right? Rents went up a lot the last couple of years, and it's one of those like kind of saving graces, maybe a godsend for real estate investors, but kind of a sign of inflation in the world as well. Like, let's be on the other side of the conversation too. People have a fixed amount of income that they're making, and as cost of living increases across the board, it does affect rents too, and that affected rents over the last couple of years. But what's interesting is will rent come down? And if so, when and by how much and that. So the article that I want you guys to check out is Nabiku will post it today, posted here for you guys to check out, an article that I really enjoyed. And so the short answer is I have never seen, as a real estate investor, I've never seen rent to come down. What I've seen happen, and this happened in 2008, 9, 10, rent got stuck for a while at a certain number. And then it slowly started increasing in that. So I've yet to see rent drastically decrease. But what I've seen happen is landlords, because vacancies get a little more increased and things like that, what landlords start to extend rents for 2 years, maybe even 3 years. I know multiple landlord friends of mine that are doing 2-year leases right now to lock tenants into longer term rent contracts, because let's face it, as a landlord, from our perspective, your biggest operating expense, the largest operating expense you're going to have in any residential housing arrangement is vacancy. Forget about real estate taxes, insurance, maintenance, that stuff. Those are all important, right? But 1 month of vacancy, guys, 1 month equals 8% of your possible operating revenue for that year for that unit. So 8%, that's a lot. What if you're vacant for 2 months in a single family home? That's 16% of the potential revenue you could bring in. God forbid you're vacant for 3 months in residential housing for an apartment, right? You guys want to get those units released immediately and maybe full with great people that are going to pay their rent on time and live there for a long period of time. And that. So what we're going to see more landlords realize is that they'd rather, and this realization is happening already, because the fact is that rent has hit the top of the market. Wages have not gone up anywhere near to the point that rent has. And so wages need to catch up. And that's probably the next shoe to drop. That's the next thing we're going to see happen is workers demand more wages. That might need a little bit of a recession for that to happen, and for companies to start shaking loose some employees they have, employees going out, finding new employment arrangements. And as we come out of a recession, wages will certainly be the driver of that, of where new employees are going to go for new job opportunities that show up. So once that happens, then reasonable rent increases are going to be possible. But I think you're going to see rents continue to stagnate and to rent increases continue to drop. But again, one more time, guys, I've never seen rent fall off a map. I just haven't. Guys, I just haven't seen rent drop 10, 15%. Maybe the one place you'll see it is in super competitive markets. And what you're going to see there is, let's say, competitive market, Austin, Texas. Okay. This is happening, by the way. Austin, Texas is decreasing in rent. And here's why that's happening, right? Is that there was a lot of development, a lot of buildup, because everybody wanted to be where the cool kids were and develop properties in a cool kid market like Austin, Texas, where lots of people are going in, jobs and real estate investors as well. So lots of cranes were over Austin, Texas the last couple of years building multifamily housing. The problem is all the multifamily that got built there came on market online around the same time. And so developer A is competing with developer B down the block to try and get people to move into their new built 50-unit apartment building or whatever it may be. And so they're going to start dropping rents to get people to move into their apartment buildings. And so that's something that you see in very competitive markets that got built out, maybe overbuilt over the last couple of years. And so you start seeing rent concessions. But this will not be a national occurrence. This will be very in pocket markets on Class A plus product that just got built. And that's where you're going to see rent deductions. Other than that, it is Matt's crystal ball that says that we're going to see rent stagnation the last couple of years. And this report says that rent growth is slowing. Rent's at 3.4% through July of this year, which is not much, nowhere near what it was the last couple of years. But that's actually 3.4 is actually a fairly healthy increase for rent if you look at rent growth over the last 10 years. 3.4 is about right. I think we got more contraction to see, that you might see 1% to 2% rent increases over the next couple of years, and then maybe growth beyond that. So that, guys, is why rental prices are coming down, or maybe why they're not, and where rent's going to go over the next couple of years. Hope that's helpful to you guys. If you guys have questions you'd like for me to answer here on this YouTube channel or here on these live feeds at DeRosa Group, please post it in the comments. I'll do my best to tackle any commentary on current events going on in the real estate investing world. I got your back. Take care, guys. You want to hear more about us, go to derosagroup.com, DEROSA, derosagroup.com. There it is right there. You can hear more about us.